Hello, everyone. Welcome back to the Carly P. Riley Show. Here on this show, I talk a lot about insider traders and scammers and con artists and usually people who are being held to account in some way by the US government. But today, I want to talk about what happens when the US government does something that seems blatantly problematic. I've been talking a lot about the FTX bankruptcy lately, and folks, I'm sure, know that the FTX estate has recovered a lot more money than anyone was expecting. There are billions upon billions of dollars sitting in the FTX coffers, estimated to be $16 billion by the time this whole thing wraps up. Who knows? In any case, a lot of people are trying to get their hands in the cookie jar as a result of the fact that there are now cookies to be had, cookies to be eaten in that cookie jar. And the IRS, the US government, the Internal Revenue Service, is no exception. Now, in a bankruptcy process, it is normal for the IRS to have some sort of claim. It's possible that a company owed the IRS money back when it was still a functioning entity, and now during the bankruptcy, the IRS is one of many players who has a claim against the company and has money that it is owed. But in this case, the IRS claimed that they were owed $24 billion. That's billion with a B. Folks who watch this program know that I am still so interested in this case, still so interested in this bankruptcy, because I am concerned for the people who have already once been victimized by FTX. I feel that there are ways in this whole bankruptcy process that they are being victimized again. You have all these headlines saying that customers are getting 100% of their money back. They're not. Folks who held crypto on the exchange are getting far less than what they had deposited on the exchange in most cases. And you have all of this money sitting there. To me, I want the most amount of money possible to go to the actual customers themselves. The IRS trying to get $24 billion would entirely wipe out all of the money that has been recovered in this process. On top of which, FTX was an international company primarily. You had FTX US, but that was just a tiny piece of what this whole exchange was. And then you had Alameda, which was a US-based entity that certainly made a lot of money, though it also lost a lot of money. But in aggregate, you are talking about a primarily international entity that would not be subject to US income taxes. So how in the world you get to a $24 billion number is pretty hard to fathom. And in fact, this is something that the debtors, the lawyers, the bureaucrats running the FTX bankruptcy, they have been fighting the IRS about. Now, folks who watch this show know that I am not particularly a fan of the debtors. I have not been somebody who's overly sympathetic or praiseworthy of the people who are running this bankruptcy. But I have to say, in this particular case, I find myself on their side. There was a hearing actually back in December about this issue, about what the IRS was owed. And there was a Sullivan and Cromwell lawyer who was present to present the debtor's case to the judge. And I have to say, it's interesting because you're watching this lawyer who obviously has a lawyer's brain and is very like, mer, 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 like this is what's right, but whatever, who knows. And it's like he's like melting down in the face of this complete irrationality on the part of the IRS, on the part of the government. At one point, the Sullivan and Cromwell lawyer says, the document that we received from the IRS, the one that says we owe $24 billion, it doesn't justify that $24 billion number. It just states it. And he says, what it appears the IRS did is it took the taxes owed that it claims FTX owed in 2021 and it multiplied it by $1.50. Basically, it multiplied it by 1.5 to come up with a number for 2022. And then it did it again to come up with a number for 2023. Now, quick context, quick timeline in case you missed it. FTX wasn't even functioning in 2023. FTX collapsed and declared bankruptcy in 2022. I'm not saying that means it can't owe any taxes for 2023, but multiplying the 2021 and 2022 tax years by 1.5 to get a tax number for 2023, if that is in fact what they did, is crazy. And this Sullivan and Cromwell lawyer is standing before a judge being like, this is what these numbers reflect. These numbers reflect this multiplication by $1.50. By the way, I would give anything to be the like Ernst & Young accountant or like the Sullivan and Cromwell intern that was rifling through the documents and discovered that that was what happened. Just looking at this page, this like unhinged document from the IRS, and just like, Frank, you're not going to believe how they came up with these numbers. I think they just multiplied it by 1.5. Like, it's so wild. Now, of course, the IRS representative at this hearing completely justified their numbers and said, no, this is $24 billion is right. We didn't get a full explanation from her in the hearing as to like how in the world this number could be right, but you did get little glimpses of what their argument is. And part of their argument, I believe, is that they felt they were owed income taxes on all of the customer deposits that were made to FTX, since FTX spent many of those customer deposits as though it was income. That seems to be her argument, is like, well, FTX obviously didn't declare these customer deposits, or Alameda didn't declare these customer deposits as income, but then they spent them on things. So I think that is what she's getting at. I mean, we don't, again, hear it outright, but I think that's what she's getting at in some of the comments she's making, which I don't need to say how just unhinged that is. I mean, we all have, as a society, a jury has determined that clearly these customer deposits were not in fact income. So, and it was very mistaken to treat it as such. So the IRS cannot come in now and be like, okay, but we're going to tax it as income anyway. And by the way, I still don't know how you get to $24 billion, even if you do factor in customer deposits as income. I will say the judge did not seem to be particularly sympathetic to the IRS in this hearing back in December. At one point, the IRS representative said, when a tax return is filed, the taxpayer has all the information. It's on them to provide that information to the IRS. It's not on the IRS to make up a number. And the judge at that point interrupts her and says, but isn't that what you did? Where did the $24 billion come from? So the judge is like, but you did just make up a number. And this was all, this IRS representative was trying to make the point that the debtors had not submitted enough information in the tax returns they had filed for FTX. In the tax returns, they had said that FTX had an $11 billion loss. Basically, the debtors were like, we don't really understand why we owe you any money, because this company was a shit show, lost a ton of money. That's frankly how we got into this situation. And we can't even get into the ballpark of, $24 billion. Where this has ended, because we did get some resolution on this just last week, is that the debtors are going to pay the IRS $885 million, nearly $1 billion in claims. Now, those claims are subordinated to the FTX customer claims, so customers will get paid out before the IRS does. But I have to say, it still feels high. Like, that still feels like a weirdly high number when you consider what even ballpark revenue likely was for this company in 2021, 2022, 2023, that was based in the US. But look, I don't know, right? I'm not looking at the same returns. I'm looking at the same numbers. The argument on the debtors side, on the FTX side, was like, look, we don't want to have protracted litigation with the IRS. I'm sure, by the way, the IRS knew it wasn't going to get to $24 billion, and it was itself some sort of negotiation tactic in order to stir up fear among the debtors so they could get a big payout in the end. They could get as many cookies as they could out of that jar, which I have mixed feelings about. I mean, I'm patriotic. I'm not anti-taxes, but I am in this case pretty pro-creditors. And it feels, as this whole thing does, it feels like overreach, frankly, by the US government, who have really overreached when it comes to crypto and gotten very creative in the arguments that they have made to do various things when it comes to crypto. This would be an example of the IRS getting very creative and making some very creative arguments in order to justify a payout and a payday, which I see as coming at the expense of creditors. Anyway, that is our episode for today. I hope you somewhat enjoyed this, though you may be frustrated as I am. And if you did enjoy this, please do consider subscribing to the channel, liking the video, commenting below, all of the things. And with that, I will see you next time.